Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. I say don't take advantage of people in this "don't fuck this up" premise. Do not try to trade or use fear of missing out to get something. To keep things simple, just watch what you do and use only the bigger tickets. If you're going to break down into stuff, do it in the smaller stuff because it's more likely to change. There is a very good chance that you will get it wrong, but you can also get 100x in the room. I know a lot of people are interested in that. I want to make sure everyone stays on the straight and narrow. And it always feels bad to see these drops. I've been doing this since 2013 and they never feel good. But the truth is that it's normal. The forward-looking base liquidity is going to come back then. Will it happen this month or next? I have no idea. We're not in it for the short term, so it doesn't really matter. We do know that it has to go back because of the everything code and the money. Start giving this some thought and getting ready for where this is going to lead you. Around this halving period, the next phase generally starts. Things start to speed up in the next phase, which is called the banana zone. There are times when we drag up slowly and then start going. So that's what I think happens. That's when things really go crazy. That's altcoin season. Raoul Pal starts by talking about the most basic thing about Bitcoin markets, how volatile they are. He says that crypto is naturally a 70% volatile asset class, which means it can go down a lot and also go up a lot. This high level of fluctuation is not a bug, it's a feature of what Pal calls the best performing asset class ever. But with the chance of huge gains also comes the chance of huge losses, which is why Pal says to be careful. His "don't FKCK this up" argument is based on the idea of handling this volatility in a smart way. He says not to take on too much risk or give in to FOMO, fear of missing out, because both can cause huge losses. He says to stick to the basics and invest in bigger, more well-known tokens. If you want to take on more risk and get more return, he says to do so with smaller, more speculative assets, is to keep your feet on the ground and resist the urge to follow every market move. This video has been liked, subscribed to, and post alerts have been turned on. Please take a moment to do these things. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks, and have fun with the movie. Do not try to trade or use fear of missing out to get something. To keep things simple, just watch what you do and use only the bigger tickets. If you're going to sink into something, do it in the smaller stuff because it's more likely to change. You have a very good chance of getting it wrong, but you can also get 100x in the room. I know that appeals to a lot of people, but I want to keep everyone on the straight and narrow, and it always feels bad to see these drops. I've been doing this since 2013 and they never feel good, but the truth is that it's normal. You've probably forgotten about this because it's been a year, but this is the 5th or 6th 20% drop in Bitcoin. That means you've dealt with this before. It's strange that you just forget about it. And I think Coinbase sent out a really cool tweet that said, there have been 5 Bitcoin bull markets. Should you want to ride a bull market to the top, you'll have to get through the following. Draws of 5% to 10% 6 times, 10% to 20% 3 times, 20% to 30% twice, 30% to 40% once, and 70% to 70% once. That's all during a market boom. So you have to have a certain amount of guts. To ask, has my thesis changed? You have to be able to turn off Twitter and your screens. Is this technology no longer being used? Does it have any other reason to slow down? What part of the business cycle are we in now? I spend a lot of time trying to teach you guys that this is a major asset that moves with the business cycle. This type of stock looks ahead like tech stocks and is moved by the cash cycle. Has the business cycle changed in a way that makes us think the crypto cycle will fail? Well, most likely that's not a yes. That's why it's corrective price movement. Also, if you have some extra cash lying around, you can use these fixes to add. That's what I did. I had some extra money, so I added to my Solana position. Good, I've also found that to work really well over time. One of the best ways to get a better return on this space is to take advantage of the drawdowns, even the big ones that go through cycles. Last time I didn't run out of anything. I had no plans to do that. I didn't miss the top or anything else. I knew it would be hard to get back in. You can't add X sum back in after taking it out. You bet less because you don't wish to lose everything. Your whole mind is messed up. I like to say, well, this is a longer term trade instead. When the big draws come in, I'd like to add one more thing. When you keep adding, you get back to all-time highs long before the market does. And that is a real ability. What's going on now? Why is crypto so shaky? The same reason tech has been shaking. It's not about liquidity. Don't forget that I told you everything you need to know about this code cycle. Flows of money are what drive all asset groups, but especially crypto. Adding or taking out cash is easiest to do in this currency. So I was right when I said that the bottom would happen in 2022, based on the cash cycle. The parts of the liquidity cycle that look ahead will last well into 2025. That means I don't need to worry about anything. That's why we're looking at the changes in cash. If you think about us liquidity, it's driven by the Fed's balance sheet, which they've been doing QT. This is what the liquidity air hole was. They've been tightening it, which makes it harder to get cash. But the Treasury has made up for that by drawing down the reverse repo. The reverse swap is the opposite of what the QT did. On the other hand, the Treasury General account is the other part of the issue. Janet Yellen is in charge of this account, which is like the US government's checkbook. She has been putting that together. But these have meant the liquidity base since 2022, and it's been going up a little bit. You learned from the everything code cycle that there is no way to pay off your bills. It's now a word that people use, fiscal power. This is the code cycle I've been talking about for 2 years. The everything code cycle says that the system has too much debt if GDP growth is too slow. Either interest rates need to go down or growth needs to speed up. Now, over time, growth is driven by population. That's not something we can change. You get growth that goes up and down, but not the overall trend rate of growth, which has been slowing. There is 100% of GDP in debt in the government sector and 120% of debt in the private sector. This means that the available GDP has to pay the interest on the debt. That's why we don't have enough GDP to pay the interest. When interest rates are high, this gets a lot worse. The average rate of GDP growth is about 1.75%, or 2%. The bond market has been going crazy because there isn't enough GDP. Even though the Fed has been talking about lowering rates, prices have gone up over time. For this reason, there isn't enough GDP growth. This is the round of all the code. That's why it leads to excitement, or more cowbell. There are various methods that can be used to provide stimulus. That's why lowering interest rates is the most obvious thing to do. The road has been like that before. The other way is to add money to the system through a backdoor method. The one most people know about is quantitative easing. The other one is taking money from the reverse sale. And also using up the general funds of the Treasury. That's about it for now. More is on the way, and I'll talk about that in a moment. So where are we now? What was the point of the air pocket? There was QT going on, so they sold bonds. It has been putting money into the budget because tax payments have been coming in. The money leaves money market funds and goes into Janet Yellen's bank accounts and cash book. She hasn't spent the money yet, so it's just sitting there taking money out of the system. By putting out short-term notes, she's been trying to help the market. That's how you drain the reverse repo. Powell's idea of the everything code cycle helps him understand how debt, growth, and liquidity all affect each other. He says that the current state of the economy is marked by fiscal dominance, which means that policy choices are based on the need to pay off government debt. Since GDP growth isn't fast enough to keep up with rising debt, Powell thinks that central banks will have to lower interest rates, do quantitative easing, or take some other action to bring more cash into the system. Powell says it's not just happening in the US but all over the world. He says that the same thing is happening in Europe and the UK.